Hey, what's up, you dirty cave dwellers? While you guys are on a quest for fire, I'm on a quest for solvency. Let's go! Alright, today on the quest for solvency, we're going to review ACH. I think this one's going to pump. If there is one asset that's setting up for a nice market maker model, this is the one. There's so many coins that are aligned this way, but this one looks very clean to me. So let's start from the top. You guys know me, I like to look at the weekly first and just kind of get a vibe for what the order flow is on high time frame. That's usually going to spill over into daily and 12 and 4 hours. So we'll start with the EMAs. Again, based on the data on the weekly, it's not going back all the way, so it's cutting off a couple of the EMAs here. I'm using the 9, the 21, the 89, and the 100. These are the short bands, 9 and 21. They kind of show the directional bias on the immediate time frame, or what in the last 14 periods, 21 periods, on whatever time frame you're using, what is the bias or order flow. And then 89, 100 is just showing a smoothed out average. What I'm usually looking for is for everything to converge in an area and then kind of flatten out and then send. In this case, we're getting a bit of a squeeze between the short bands here, which are already squeezed up, and then it's entering the 89 on the weekly, and then you could see the convergence on the daily. This is really, really tight. When these flatten out, usually you get big moves, right? So I talk about this every now and then on the servers, but the weekly looks really bull. Also, if you go on the RSI, this is another thing I do on a weekly health check, is just mark out the uptrend. The downtrend. Typically, when you're in bearish order flow, you're going to get these lower pivots to the downside. And then once you get above your EMA and you break out from the uptrend, you have confirmed bullish order flow. So on the weekly, these are moves that you can't really fake them out, right? Like you fake out a 4 hour or 1 hour breakout, but weekly is very difficult to reverse once that momentum shifts and the order flows confirm bullish. So in this case, we broke out of the bearish control, we broke above the downtrend, and we broke above the 14 period EMA. And again, I'm using the recommendation by the creator of RSI, Wells Wilder. He uses a 14 RSI length, and then I'm using 12 for the EMA RSI length. So you can see on the weekly, that's turbo bullish. And then let's overlay the weekly setup here. So another thing I like to do on the weekly is internal to external or external to internal. In this case, we took out these highs, so basically 1, 2, and 3. This is a major liquidity pool up here, and anyone who entered here, if you pop it into a daily, you'll see with more detail, they likely put their stop right above this wick. So if we just mark out that one wick, right there and then pop back into the weekly, you'll see that got tagged. So this was a stop run. You just got to think logically. If you were retail and you were shorting here, where would you have put your stop? And then assuming the price reversed and started moving up, for people that don't honor their stops, where would they have moved it up to? So even if they moved it down here, but then this trade started to reverse on them, unless you're one of those that respects your stop and allows yourself to get stopped out, if you didn't take profits on the bottom and you were starting to push your stop up here, you got targeted on that raid. So that was the external raid, and then here was your internal rebalance. So this was already kind of rebalanced here, and then you had this one right here. You still have a small one here and a small one here, but this is the one that stood out mainly because order block traders on this weekly probably put their stop below this wick that created the weekly order block. So that's kind of how order block traders are trained to put their stops, but that's usually what gets run on the weekly and daily time frame. So again, we went external to internal. So the next thing we're really looking for is the external, which is basically these 3 highs on the weekly. And this will come into play in a moment. So now if we pop it into daily, you'll see the convexity shifting, right? So when I talk about convexity, it just means from this top, you get an acceleration down, mean revert a little bit, so corrective retracement, and then you continue to push down. But all the while, it's doing this thing where it rounds at the bottom. So that's when we talk about rounding bottoms, that's the convexity shift. And it's usually like, let's say right here, you started looking at it. This is where you're starting to see, okay, it's starting to shift order flow. And goddamn phone, let me shut this thing off. These peasants bothering me on a Monday. All right, so this is what they talk about with a rounding bottom. It's just indicative of a shift in order flow, or at least deceleration of the down move, right? And then that's why we pop in our RSI just to see how this is shifting as well. And at the bottom, you're typically looking for bullish divergence, or any of the 3, Class A, Class B, Class C, bullish divergence. But anyway, that's the daily. Now what I'm seeing here is a market maker buy model. So this is the sell side of the curve, where basically you had these relatively equal highs on the daily. That's why I've got it marked out here. This is representing a major liquidity pool, and it was the original consolidation on a market maker model. Then on the sell side of the curve, you're looking for levels of distribution, which is what we're visualizing with these Darvas boxes, right? So you can see after this accumulation of shorts, a big drop down, targeting this external low, and then you get touches of both extremities of this Darvas box, and then another drop. So this again was targeting these lows and rebalancing over here, but leaving this liquidity pool, and anyone who entered here is adding their stop here. So that got targeted on the final drop down. I'm not saying this is the end of the down move, but I'm saying this is the end of the down move. It's over. This is going up now. So the way you verify whether the order flow has shifted is obviously a market structure shift. Typically, this is preceded by a liquidity raid. So I'm not sure if this one took out this low. Of course, market maker left equal lows here for another day. Fucking psychopaths, man. Absolutely, like, these guys have turbo brain damage. But yeah, so anyway, at some point, that tells me at some point there's going to be a blow off. Market maker, I'm seeing this on all assets. Like, there's equal lows on everything that left behind, on too many of them, right? So that tells me that market makers, or specific market makers that make for different assets, so multiple assets, they are leaving equal lows for a future day to take, or on that push to take much lower liquidity pool. So anyway, this got taken out here. So this is your long-term low, and then you could see there's a raid over here, but then it pushes back into this imbalance and then holds and pushes off. So this is our breakaway gap. This is a rebalance, and then this is your official market structure shift, because we had a daily close above the previous high. So that's how you confirm you're now in bullish order flow. And then what I normally do is switch on the bullish arrays just to see if they're getting respected or disrespected on that push up. So here you could see that was our original bearish order block that pushed down and rated this low. We then closed above it. So this should behave like a bullish breaker now, right? And above that, we had this imbalance created on the daily, just tying in these two wicks. Between that, on this candle, that was an imbalance. So this general area is going to be my area of interest. There's a lot of low resistance liquidity. It could run right up into here and then reverse, so it doesn't have to come back immediately. But we do have equal highs right here. So those are your equal highs. And then we have a major liquidity pool right here. So my thought process going into this is we've pumped quite a bit from the weekend till now, 40%. It would make sense for the market maker to pause here, trap longs. So anyone who got in on this candle and didn't take profit here, pause here, reverse it back into this zone, which is in discount within the dealing range. So let me just switch this out. So from our dealing range is from this low to this high. Anything in discount will be below the 50. So basically rebalancing this daily imbalance and then pushing into that daily breaker just to see if that holds and test support before pushing off into another expansion box. So this is why I'm thinking it can play of one of two ways. Either it takes liquidity and runs these highs right now and then pulls back, or I'll be even more certain the move is going up if they stop it here. So that you stop volume here and then there's like a sell wall pushing the price back in to rebalance this zone, and then basically enter discount. And then whoever entered down here, smart money, they would be looking to compound their position over here. So they might offload a little bit here and then they're basically buying back for substantially lower over here. So that's how you compound. That'd be like a 20% discount from where they sold. So I'd have more conviction on this long if it stopped here and then pulled back and then ran, because now you have a clear draw on liquidity. This, and then a daily imbalance right here. So this is really algorithmically being traded right now. The targets I'm looking at on the buy side are basically going to be, let me just pop these off. This one and this one right here. So the targets I'm looking at based on entry, I'm looking at this drop from here to here, which was the smart money reversal candle from the previous high. Your standard deviations are basically the 2 to 2.5. Let's say the 2.5 is the main target, this high, which would also flush out all this buy side stops. And then your extension could go to the 4. But again, once you're in that range, once you hit that 4 standard deviation, it's just the take profit zone. It doesn't mean that this is going to reverse at the 4. It just means you might get a more measured pullback and then create that next Darvis box in this zone right here before targeting the actual draw on liquidity, which is going to be the previous or the original consolidation. It would make sense to reverse at the 4 just because there's obviously a cluster here and retail resistance zone. Something I talk about on my bread and butter setup, retail resistance zone just below the real draw on liquidity. And the way that works is retail will short here around the 4 standard deviation, not knowing that the real draw is above and that this is just a scalp short, because the final move or the climax of this market maker buy model is going to be up here once they take that liquidity pool. So my entry and my thought process is going to be, again, between the breaker and the imbalance that was created over here. And if we zoom in, I'm going to DCA with the first entry being the top of the imbalance, which would also on low time frame take out this liquidity pool. So from there to there. So those lows are likely going to be targeted on that next corrective pullback and then rebalance the rest of this candle on the 4-hour into the breaker. So that's why I'm taking my early entry up here. I'm going to DCA some more at the bottom of the imbalance on the daily, which again, there's a 4 hour that goes even lower. It goes all the way down to this, my deeper entry. So it would make sense to start laddering in again here. One more time here, which is a daily order block that shifted structure, right? And then one more, this is a cheeky low entry, and it's kind of a high risk one because you want to see this entry hold. And the only thing you really want to see is a wick into here. You don't want to see a close. If you get a close, I'll have to pull my position and like this stop out with discretion, right? But either way, I'm putting the stop below this wick. This should be a protected low just because we've shifted market structure and we have a real compelling reason for it to stop volume in this zone right here. So just look for that deceleration on the move down over there. Anyway, that's the setup for the weekly and daily market maker model. Again, it has perfect time frame alignment. I'm not going to go through it on this one. I'll do a more, I guess, educational video on time frame alignment, but this one is probably the cleanest one. I know the Atom one is clean, but this is now officially the cleaner of the two market maker models. I'm looking to play the full range. And when you get low market cap coins like this, it can easily pump right to the climax within a few days or a week. So you want to be correctly positioned in case you get that giga pump soon. All right, guys, enjoy the rest of your day. Have a blessed week. Speak soon.